In 2022, FTX was valued at $32 billion. Within days, it was bankrupt, and its founder was later convicted of fraud. The story began in the crypto boom. Bitcoin, tokens, and trading apps turned digital money into a global retail spectacle. Low interest rates and pandemic-era speculation helped push money into risky assets. Crypto promised speed, independence, and huge returns. Millions of new traders did not want to mine coins or manage keys. They wanted exchanges that felt as simple as stock apps. That demand made crypto exchanges powerful gatekeepers. They held customer balances, routed trades, and became banks in everything but name. Before FTX, Sam Bankman-Fried co-founded Alameda Research in 2017. Alameda was a crypto trading firm built for fast, complicated markets. Alameda chased price gaps across exchanges and tokens. In early crypto, fragmented markets made those trades unusually profitable. Bankman-Fried had studied physics at MIT and worked at Jane Street. That background helped sell him as a math-driven trader. In 2019, Bankman-Fried and Gary Wang founded FTX. The name stood for Futures Exchange, and it targeted serious crypto traders. FTX offered derivatives, leverage, and features built for professional speculation. It advertised a cleaner, more advanced risk engine. The company grew from Hong Kong roots and later moved headquarters to the Bahamas. Its image became global, sunny, and lightly regulated. Alameda and FTX stayed closely connected. Alameda traded on FTX and was described as one of the exchange's major liquidity providers. To outsiders, FTX and Alameda were separate businesses. In practice, their shared ownership and relationships created obvious conflict risks. In July 2021, FTX raised $900 million at an $18 billion valuation. Major venture investors wanted exposure to crypto infrastructure. FTX kept raising money into 2022. The company was no longer a niche exchange, it was a Silicon Valley growth story. FTX bought naming rights to Miami's NBA arena in 2021. The exchange wanted its name beside the biggest symbols in sports. Celebrity promotion followed. Tom Brady, Gisele Bündchen, Stephen Curry, Shaquille O'Neal, and Kevin O'Leary were all tied to FTX promotions or investments. In February 2022, FTX bought a Super Bowl ad starring Larry David. Crypto companies were so visible that the game was nicknamed the Crypto Bowl. The message was simple: do not miss the future. FTX was selling the fear of being late to the next financial revolution. Bankman-Fried became the public face of that future. He appeared in interviews as a young billionaire who slept little and solved hard problems. His casual clothes and messy hair became part of the brand. The image suggested genius without Wall Street polish. He also promoted effective altruism. He said he wanted to earn enormous wealth and give much of it away. FTX-linked philanthropy-funded projects in pandemic prevention and other causes. The giving helped make the business look morally serious. Bankman-Fried also became a major political donor and policy presence. He pushed for crypto rules while presenting himself as the responsible insider. Inside the empire sat FTT, the exchange token issued by FTX. Holding it could give users discounts and other platform benefits. FTT's value depended heavily on confidence in FTX. If the exchange looked strong, the token looked useful. But a token created by an exchange is not the same as cash. Its market value can disappear when trust disappears. FTX publicly emphasized risk controls. Regulators later said investors were told the platform had sophisticated systems to protect customer assets. The SEC alleged a different reality. It said Alameda received special treatment, including access to customer-funded credit on the platform. At trial, insiders testified about code changes that benefited Alameda. Prosecutors said those changes let Alameda draw heavily from FTX customer funds. In 2022, crypto markets began breaking. Terra, lenders, and hedge funds failed as token prices collapsed across the industry. FTX tried to look like the rescuer of crypto winter. It explored deals with distressed firms while its own risks stayed hidden. The reputation worked for a while. Bankman-Fried was treated as one of the few crypto leaders still standing after the crash. In January 2022, FTX raised $400 million in Series C funding. The round valued the company at $32 billion. That valuation was the peak. FTX looked like a permanent institution, not a company months away from collapse. FTX also announced a $2 billion venture fund. The company was investing, sponsoring, acquiring, and expanding at once. The bigger the image became, the more confidence mattered. Customers had to believe their deposits were safe and available. Behind the image, later bankruptcy filings described weak records and weak controls. The new CEO said reliable financial information was missing. On November 2, 2022, CoinDesk published a report on Alameda's balance sheet. The document showed a heavy dependence on FTT. CoinDesk reported $14.6 billion of Alameda assets as of June 30. Its largest listed asset was $3.66 billion of unlocked FTT. Another $2.16 billion appeared as FTT collateral. The balance sheet made the separation between FTX and Alameda look dangerously thin. The problem was not just one number. The market saw Alameda leaning on a token created by its sister exchange. On November 6, Binance CEO Changpeng Zhao said Binance would sell its remaining FTT holdings. He cited recent revelations. Binance had received FTT during an earlier exit from its FTX investment. The planned sale turned private concern into public pressure. FTT fell sharply as traders reacted. In crypto, a loss of confidence can become a price crash almost instantly. Customers rushed to withdraw. Reuters reported about $6 billion in withdrawals from FTX over a 72-hour period. It was a digital bank run. Customers did not line up at doors, they clicked withdraw and waited for balances to move. FTX could not meet the demand. By November 9, users were reporting that withdrawals were no longer being processed. The platform that promised speed suddenly had a liquidity crisis. Customer balances existed on screens, but cash was not available. On November 8, Binance signed a non-binding letter of intent to buy FTX.com. The rescue depended on due diligence. The rescue collapsed the next day. Binance walked away after reviewing the situation and citing problems beyond its control. With the deal gone, FTX had no obvious lifeline. The shortfall was widely reported at around $8 billion. Bankman-Fried searched for emergency financing. But investors were now looking at a hole, a frozen exchange, and a collapsing token. For customers, the crisis was immediate. Money they believed they could access was trapped inside bankruptcy-bound companies. Alameda's future also ended. Bankman-Fried said the trading firm would wind down as FTX tried to survive. Regulators moved fast. Bahamian authorities froze assets of an FTX subsidiary, and investigations opened in multiple jurisdictions. On November 11, 2022, FTX filed for Chapter 11 bankruptcy. The filing included FTX, FTX US, Alameda, and more than 100 affiliates. Bankman-Fried resigned as CEO that same day. John J. Array III, known for restructuring work after Enron, took over. Ray's first major bankruptcy declaration was devastating. He described a failure of corporate controls and an absence of trustworthy financial information. The bankruptcy weekend got worse. Hundreds of millions of dollars in crypto moved out through what FTX called unauthorized transactions. The shock spread through crypto. Bitcoin fell to multi-year lows, and firms exposed to FTX faced their own crises. BlockFi, a lender tied to FTX, filed for bankruptcy later in November. Genesis halted withdrawals, adding to contagion fears. On December 12, 2022, Bankman-Fried was arrested in the Bahamas. U.S. prosecutors charged him with fraud and conspiracy. He was extradited to the United States and pleaded not guilty. In August 2023, his bail was revoked after witness tampering concerns. Several former insiders cooperated with prosecutors. Caroline Ellison, Gary Wang, and Nishad Singh pleaded guilty and testified about the misuse of customer funds. The criminal trial began in October 2023 in Manhattan Federal Court. Prosecutors argued that customer money had been diverted through Alameda. On November 2, 2023, the jury found Bankman-Fried guilty on all 7 counts. The convictions included fraud and conspiracy charges. On March 28, 2024, he was sentenced to 25 years in prison. The court also ordered forfeiture of more than $11 billion. Customers later entered a long recovery process. The repayment plan values many claims in dollars from the bankruptcy date, not later crypto market highs. FTX's lesson is simple: if customer money, leverage, and insider privilege mix, trust can vanish overnight. Subscribe to the Fall Files for the next case.